welcome. You're watching Money, Money, Money. I'm Samira Abdi. Well, these are exciting times to be an investor, especially if you're an investor who's been putting in money over the last few years, patiently waiting for a moment just like this when a hope-fueled rally will take you to dizzying heights. There are also those, I'm sure, who would have missed this early bust, but it's not too late. If you've been paying attention to the experts, you'll know that the best still lies ahead. So how can you get a piece of that pie? Hemant Rustagi of Wise Invest Advisors joins in to tell us just that. And also with us today is a man who's scaling dizzying heights himself. Well, if you haven't guessed already, then let me tell you that joining me in the studio today is Aditya Tare, the wicket-keeper and batsman for the Mumbai Indians. Hi Aditya, thanks very much. Welcome to Money, Money, Money. Hemant, good to have you with us back again. But for everyone who's wondering what Aditya is doing on this show, bang in the middle of football season, let me tell you that he started off as a footballer, right?
Yeah, very true.
So what team are you supporting?
Well, to be honest, I'm an Arsenal supporter.
Okay.
So at the moment, there are 3 Germans in the Arsenal team, so I'm going with Germany.
All
but
right.
My underdogs are Italy.
Okay, what about you, Hemant? Any favorites?
Well, I'm supporting Argentina.
Any particular reason?
Well, I like them. I think they're a very exciting team. I mean, I really like them, the way they play, the style of play.
All right, I'm just going to be watching all the matches and enjoying myself. But Hemant, you know, these are very exciting times for investors, and especially for a young investor like Aditya. Do you have a lot of previous experience in investing, or do you want to just get started now?
No, I mean, all my funds are managed by my father, so I really want to get to know how this thing works, investment. I think it's vital for me to take over from my father. So. It's a pleasure to come here on the show and get to learn about the markets and investments.
All right, good. So I hope we can help you, Aditya.
Yeah.
And Hemant, for someone like him who is very, very young, he's suddenly seeing a lot of funds, how does someone like him manage his money? What's a good allocation strategy for someone like Aditya to follow?
Well, I think, the most important aspect of investment is what we call the asset allocation. And irrespective of whether you get a lump sum money or whether you're a regular guy getting your salary. So the most important aspect is asset allocation. And the reason why it is important is because when you invest in different asset classes, like you have equity, you have gold, you have debt, you diversify your portfolio across different asset classes. And they all behave there differently at different times. Now, for example, when equities are doing very well, it's not a good time to be in gold. Okay, when the markets are doing very well, the interest rates has to be down because that's when the markets will start doing well. And that's again, if you look at the debt side, there are different options within debt. So some options will work when the interest rates are high, some options will work when the interest rates are down. Okay, the most important thing for any investor is that you need to look at what is my objective, what is that I want to do with the money. The moment you do this exercise, what happens is it allows you to decide which asset class to go for. Now, for example, when you start looking at your retirement, you will have maybe 25, 30 years to go. That money can go into an asset class like equity, because equity is potentially the best asset class, but it also tends to be very volatile. 15, 20, 25 years time horizon will ensure that all the volatility is taken care of. And also, if you keep investing on a systematic basis, you take care of volatility there. Then comes, let's say you want to buy a car in the next 2 years. You have only 2 years, which means your focus has to be on safety of capital. You cannot risk your capital because you have a goal in mind.
Yeah.
There your money has to go into debt.
Yes, I don't know if you're very sentimental, but when it comes to investing, you cannot afford to be very sentimental. It's very, very methodical.
Yeah.
But and you're lucky that till September you have some time to actually sit and, like Hemant said, chalk out all of your goals. But you're also someone who has fluctuating income. So would that also be affecting you?
Yes, definitely. I mean, I think my constant income would be my salary from my corporation, that's Indian Oil. And besides that, the IPL contracts keep on varying. 1 year it can be this low, and then in the auction, depending on how you play, it can just go high. So the contracts are really, variable. So I think depending on what amount I get, I need to decide. And after that, if I have a chunk of money, then I need to know where exactly to put in so that I can also earn from those investments.
Well, Aditya, we hope that your contracts only go one way, and which is up. But Hemant, for someone like him who has varying income, he probably has lump sum investments that he needs to make. He, unlike other investors who would be doing SIPs or systematic investment plans, he'll need to invest at lump sum. So is that a good idea, and how can he otherwise stagger it?
Taking off from what we were discussing earlier, now a good thing about him is that he has a regular income, which means that his regular income needs are taken care of. Now, for example, if whatever money he gets, let's say this year, if he does not require that money, that can be allocated for his long-term goals. The more lump sum he puts today, the money that he needs 10 years from now, he's going to get much better return. It's always good to invest a lump sum and back it up with some regular investment. Of course, it has to be in some proportion.
So at the moment, all my money is in my savings. So how do I diversify that amount into investments?
Saving is actually not an investment. There are better options there. You have mutual fund, debt funds. Okay, there are, like, for example, you have ultra short-term fund, which is as safe as, I would say, as a saving bank account. It'll give you higher return. And for someone like you who will be coming in 30% tax bracket, what you need to remember is, if you get 4.5%, 5% from saving bank account, at 30%, 1.5% goes into tax. What are you left with? 3%. So you should be looking at options which give you higher return, are as safe, if not more, and also give you better post-tax return. As an investor, especially those who are in the higher tax bracket, the focus always has to be on the post-tax.
So as a cricket player, generally our life, cricketing careers, sports career is about 15 years, 12 to 15 years. And the amount I'll be earning in that span, if I want to earn that, not exactly that amount, but on par with that amount, if I want to earn it after my career, after my retirement, how do I go about it?
These are your accumulation years, okay? And after that is going to be your disbursement years. Now, for example, you need to accumulate as much as possible. Now, for example, if let's say you build a corpus of, let's say 10 crore, okay? There, and then if your monthly expenses are, let's say 5 lakh, what you need in a year? 60 lakhs. 60 lakh on 10 crore is 6%, which means it's easily gettable. And also you don't have to take unnecessary risk on your money. The problem would be where you need 60 lakh and you only have 5 crore. There you need to generate an income of 12%. Now 12% means you can't generate from traditional options. He will end up taking risk at the time where he'll not be in a position to take risk.
All right, so that's how you can go about building your portfolio, but it doesn't end at just that. You need to keep reviewing it, but how often should you do it? We'll take a quick break, come back and find out more.